130% better trading skills in just 13 minutes? Sounds bold, right? But today I'm going to show you exactly how you can improve your decision making, refine your strategy, and gain an edge in the market with real examples from the charts. Stick around and let's level up your trading skills. But before we dive in, I want to show you something. In just the past few months, hundreds of our students have successfully qualified for their own funded accounts, and over 9,000 traders have built their skills with us, and the results speak for themselves. This isn't theory. There are real people who've learned and applied the exact skills I'm about to share with you. Now let's get started. Most traders fail because they focus on the wrong things. They obsess over finding the perfect strategy. They ignore the importance of execution, and they overlook the value of consistent practice and feedback. Today, I'm going to change that. I'll break down 3 key areas where you can immediately improve. And I'll even show you examples from real charts so that you can see exactly how it works in practice. Let's start with one of the most important skills in trading: identifying high probability setups using price action. Many traders rely too much on indicators, but the truth is, price action reveals everything you need to know about the market's intentions, okay? And here's an example. Look at these horizontal lines, okay? And see how the market consistently respect this level. Or here, you see this? Do you see this here in the past? How the market reacted here at these price levels? Bouncing off multiple times. And this tells us there is strong buying interest. And you see here there is strong selling interest. Here we have strong buying interest. And what happens if the market breaks through one of these levels? Most of the time it's getting a little bit messy, because then it's important to see, okay, who is stronger, the buyers or the sellers? And in this example here, you see they tried to push through this level and they didn't have enough power to moving higher, so they had to go lower to important price area. This is the last low, to get more power, to get more buyers to try the move again. And what I really like to trade is the rejection, the reversal of one of these areas. So what I don't really like is a breakout. Why? It's so often you see, for example, you see this area, what happened after that. So, but what you see is how the market reacts in these zones and what you can do with this information. But hold on, this is not all what we do. This is just plain price action, and that's not what I do to get more and more advantages at the market, to get a much higher win rate and more confidence in my setups. So go to your charts right now and start drawing the horizontal lines. Look for areas where the price has repeatedly bounced or rejected, and practice identifying these zones, okay? The more you do this, the sharper your eyes will become. And today, when I take a look at the markets, I see immediately the price areas, the price zones where I want to have an eye on in the future. But that doesn't come overnight. It takes time, but it's okay. Take a moment. Out there are so many different price action setups. Yeah, what's your favorite price action setup? Share in the comments below. I would love to know what works for you. So let's move on. Volume is one of the most overlooked yet powerful tools in trading. It shows you where the big players are stepping in. So here's an example. To get an overview over the market, for me the 15-minute time frame is very interesting, but when it comes to my daily trading, then what's also very important is the key areas in the market right now. So let's take one example. Let's say we trade on this day. The market starts in the morning at 9:30 New York time or 8:30 Chicago time. So, and I mark what? I mark areas, zones who might be interesting in the future. For me, it's this low. So, and before I enter any trade, for me it's important, as I told you, what's happening. What are the big players doing? And who's controlling the market? I ask you, who's controlling the market? You or me? No, it's always the big players. So, and they leave footprints. Yeah, they leave footsteps in the market so that we can use them to predict what happens in the future. Okay, let me show you. Keep this in mind. We have this low, and then we see the market comes down to this level. Let's go to a volume chart, and now you see what happened. Okay, do you see the difference? Okay, this is a 15-minute time frame. We can go in this chart here on a 1-minute time frame. That's what it looks like if you use candlesticks. So what we see here is nothing, just candles, and we have, okay, the price action. But where do you want to enter a trade? After the main movement has already or is already finished, or you want to enter the market as soon as possible, as early as possible. So let's see what happens here. And now we see when the magic begins. What you see here is the volume. These are areas where we have more volume, we have more activity in the market than usual. So what can I do? I mark out this area for me, and I just wait what's happening next. The first confirmation is they tried to reach the low and they got rejected. Okay, then we have the first movement in the opposite direction, and now I wait for the pullback. And do you see what happened? The market came back to this area where the volume was created. They touched this area, but you see here in this movement how hard they got rejected. Okay, when you see this in the 1-minute candle, yeah, you see this rejection here and what happened next. What do you think is the intention of the big players at a low price like this? Do you think they want to sell aggressively, or do you think they want to buy because the price is very low? I think it's logic, right? So, and now the question is, when do we enter a trade? Do we enter a trade after we have the first movement? So, for example, like the most traders do, it's they enter the trade on this level here. Okay, nice, great. Okay, in this example, okay, they have a big movement, they can make good money. But you see, we have a high risk if we set our stop loss below the last low. We, or I as a volume trader and thousands of my students, they enter a trade in this area here. They have a very low, a very small stop loss, but a high probability and a long way they can go. So which price level would be the next the market is heading to or wants to head to? It's this high here, right? So, and now imagine if you would enter the market here, then this is the way you can go, and this is your stop loss. And when we enter at this price level, so we can hold the trade until this level, yeah, when we see the first rejection, or we hold the trade much longer. But you know something about risk management, right? So if we risk 1% or 2% per trade, and we have a very small stop loss, then the way we can go and the profit we will make is so much higher than we enter here. We have this 1 or 2% of the trade of our risk, of our account size, and we go this way, right? And do you see how confident it feels when we see what's actually happened in the market? When we see where the big players enter the market or where they are active, to the other situation when we just see where are the highs and where are the lows. Okay, we have the price action, yeah, but we don't have real deep informations. So what you can do now is to add a volume indicator to your charts and start paying attention to how volume behaves during breakouts, reversals, and consolidations. The software I'm using and my students are using is the Volume Trader Terminal. It's our own software. If you are not one of my students, you can go, for example, to TradingView. You can check out my videos about TradingView, and there you can use just some small volume features. but I think for you it's the first step into the volume game, into the volume world, there where the real professionals make their money. And this will immediately improve your ability to filter out weak setups. Even if you have the best setup, your entry timing can make or break your trade. Here's how to refine it. Let's go back to the example. So what we don't know is the intention, the real intention of the big players. So they could go lower to get more power. Yeah? The lower the price, the more power they will collect. So what can we do now? And that's so important, what so many traders miss. They just want to enter the trade as soon as possible, as early as possible. And then they get surprised that they reach their stop loss because they entered the trade too early. What I always do is I wait for a confirmation. I look what the market wants to do, and then I wait for a confirmation, so that the market comes back to where it comes from. And that's what the big players always do, because they want, at first, they want to see how big is the selling power. So in this example, okay, we have buyers and they want to see, okay, how strong are the sellers? And when they see, okay, we have the possibilities and we don't have too much resistance, then they come back to the level where they have already invested, to collect more power, to get or to collect more positions, and then they start the real movement. The intention they have, they want to go very high, they want to bring the market to a higher level, and that means, okay, they had the confirmation at first, they came back to this area where they were interested, the perfect price for them, and then they started the real movement. Wait, train your patience, practice your patience, and you will see how your trading will turn very soon. So far, we've covered spot high probability setups with price action, using volume to confirm market moves, and timing your entries with precision. Now let's talk about how to put this into a daily routine that keeps you sharp and consistent. Your morning preparation. Review the major levels on your charts. Important, okay? Note any news events that could impact the market. And then live practice. Spend 30 days identifying high probability setups and marking them on your charts, And end of day review, journal your trades. Note what went well, what didn't, and what can you improve tomorrow. You've got everything you need to start improving your trading skills today. The question is, will you take action? Start small, Practice spotting setups, reading volume, and timing your entries. Build your skills step by step, and the results will come. If this video helped you, hit the like button and share it with someone who needs to level up their trading skills. And in the comments, let me know what's the one skill you're committing to mastering this week.